Hello, everybody. Welcome in. Welcome to TA Tuesdays. Today, we're going to talk about moving averages. So here we are, everybody. InvestAnswers TA Tuesdays, second episode. And as usual, in math, we trust. Thank you all for being here. Disclaimer, this is for entertainment purposes only, educational purposes, and please consult with your investment advisor. So IA, InvestAnswers, TA Tuesdays, Technical Analysis Tuesdays. Today we're going to talk about SMA, simple moving averages, and what they all mean, and what they can do and what they cannot do. So first of all, why technical analysis? Why moving averages? For time series interpretation, moving averages smooth out the noise of fluctuations that can happen over time, and it gives you a longer term picture of exactly what's going on. And it also helps you identify the trend and direction. So if you look at like a 5-day chart versus a 1-year chart, they tell you very different pictures. Now, if you look at moving averages compared to the actual chart prices, that can tell you a whole different dimension. And that's what we're going to go into today and walk through exactly how that all works. So do they work all the time? So first of all, as they say, the market has no memory and the past is not an indicator of the future. So standalone is not perfect, and moving averages do lag the market. So do not use this as a 100% trading tool. And you'll see a lot of TA people out there that say they trade, buy it religiously, and they make X percentage and it works 90% of the time. That's not true. But it is a good indicator. Again, one of the many tools in your toolkit to be able to execute in this world. So let's talk a little bit about the different moving averages that I use. So first of all, today we're just going to talk about simple moving averages or moving averages. We're not going to talk about exponential moving averages. We'll do that in a later video. But for the simple moving averages, there's 3 that I look at. One is the 200-day moving average. And the key things to note here, if something is trending below a 200-day moving average, it's a bearish sign. So think short the market, not a good thing. It means the market trend is going downwards and the asset you're looking at is doing even worse. If it's above, think it's bullish. And again, always think big picture, zoom out and look at the market. Look what competitors are doing in the same space, whether it's interest rates or currencies or commodities or tech stocks or energy stocks. Remember, always have an eye on the macro element of exactly what's going on. The other ones I look at are either 50-day or 100-day moving average. It depends on your preference. And like anything else in this business, pick what you like, pick what works for you. No two investors are alike, as I've said in previous videos. Everybody has a unique thumbprint. So I tend to go with the 50-day moving average. So think 250, and I'll show you many examples of how they work together today. Now, the 50-day average is a key level of support or resistance. Remember, and we'll dig into that in great depth as well. It's the first line of support in an uptrend, and it's the first line of resistance in a downtrend. And that's why it's so important. Now, the short-term 20-day moving average, for those short-term people that like to trade things day to day or in a 5-day period, this will be a handy tool for them. But again, I like referring to it. You know, when people ask, oh, where do you see Bitcoin going this week and will there be a dip? Then I can look at the 20-day and that can give me some information. But again, I tend to be a medium-term, long-term trader. I'm not a day trader. And that's the 20-day. Another quick little point here. When the 50-day moving average crosses above the 200-day moving average, it's a buy signal. It's a very bullish sign. But again, as I mentioned before, always check other market conditions and other indicators. Never rely solely on moving averages, despite what you might hear out there on the internet. It's important to know everything that's going on. Other technical indicators, macro events, news releases, financials. The other thing that I sometimes refer to as the golden signal, I don't know if others use that, is when the 50-day moving average crosses a line of support, it's a very bullish sign. And in the first TA video, I created all the support and resistance lines in ranges. So again, what you're going to see during this full series is we're going to build upon everything, but we're going to break down the component parts and dig into them. And then towards the end, we'll start using things in conjunction with one another. Also, an important thing to look at is I will be using daily charts for today. But sometimes if you want to drill down, you can look at the 4-hour charts as well to check what's going on. Sometimes if you really feel you've got a strong signal from the daily over a 3 or 6 month period, toggle on your 4-hour to see exactly how that chart looks as well, just to make sure everything is good. Now, there's another interesting one here. Trailing stop losses. This can be very handy as well. Imagine you buy something like a stock at $100 and it goes to $800, and you want to be able to lock in your profit, but you still want to be able to ride it up if it continues to move. It's good to have a trailing stop loss. Now, what I like to do is position stop losses under 50-day moving averages, because if you look at a stock and it bounces off the 50-day moving average for 3 or 6 months like clockwork, then you know it's a very good level of support. And you know if it's going to break through that level, it's a bad sign. That's where you put your stop loss so you can reassess your trade and your situation. So keep that in mind. However, I do want to say one thing here, and you've heard me say this before many times: don't use trailing stop losses for crypto, because you will get wicked out. And a wick is the long candle bar that comes off your position. And we've seen $4,000, $6,000 wicks on things like Bitcoin, and even $2,000 or $3,000 in Ethereum happen within the space of hours. So if you have a stop loss on crypto, you will get wicked out. Now, the corollary to that is putting limit orders in to be able to take advantage of those wicks. And that's what you guys have been learning to do very effectively. So big congrats to everybody who buys the dip effectively. Okay, now it's time to look at some moving averages and some real life cases. Just pull up some key charts today. Now what I've done, you can see here, I have some of my typical indicators hidden. My fib levels are hidden here, which I won't show you. We're going to do that in a separate session. I have my 20-day moving average, and that can be configured very simply here. Very important to use the indicator time frame, which is the same as the chart. You'll see it's the 1 day up here, and the length is 20, which signifies 20 days, and you can color it anything you want. I like a blue line. I will make it a little thicker so you guys can all see it. Okay, that is my 20-day. Now here, I also have a combination indicator here as well. So I have my 2 moving averages. I have my short, which is my 50-day, and my long, my 200-day. All right, and it's very, very important that I do this the same as the actual chart. And here you have the different types of moving averages. For today, we're just looking at simple moving averages, not exponential moving averages. And the exponential moving averages tend to use more of the latest price action as a heavier weight in the calculation. But SMAs are what we're going to use for today. And we're going to look at a few charts. So first of all, Bitcoin, because we all love Bitcoin. See, in the Bitcoin chart here, you can see a couple of things. Again, nothing big here at all. It's a 1-year chart. 1 day is the timestamp. And we see down here is the 200-day moving average. And up here is the 50-day moving average. What do you guys all see? You can see that Bitcoin, ever since middle of October, only touched the 50-day moving average twice. And that was here and here, 27th of Jan and the 28th of January, only twice. So that tells you that that 50-day moving average is not even the level of support because it only touched it twice, but Bitcoin's price trajectory is so high, it's always above the 50-day. So basically, if you see Bitcoin breaking through the 50-day, you know you got a problem, perhaps, hypothetically. Now, what I also have here is the 20-day, and you can see how that actually positions itself as well. And sometimes it can break through the 20-day very easily. It did that 3rd week of January for about 10 days. And again, 22nd of Feb for again, about 10 days. So Bitcoin tends to be weak in these 10-day periods, which I refer to as nuclear winters because everybody freaks out when Bitcoin doesn't go up by $1,000 a day and they get very upset. So again, having that 20-day moving average is a good thing to look at. What I also do, I didn't point it out here, but in this indicator, I like to color my shaded area between the 20 and 50 day. And you do that here in the plot background. And I just colored it purple for the sake of today, so it's easier for you all to see. Now let's look at Ethereum and see how it compares, because what I'm also going to do today is I'm going to show you how different charts compare. So Bitcoin to Ethereum, we saw that Bitcoin never went through the 50-day, but Ethereum, like Bitcoin, has been strong ever since the middle of October 2020. It touched the 50-day on the 24th of December. Since then, it's been on that upward trajectory. And these are my trend lines that I put in. But you'll see that Ethereum has crashed down through this trend line, and it crashed even beneath the 50-day, all the way down to $1,296, $1,300. And that was on the 20th of Feb. So that was a wonderful buying opportunity. And a lot of people are saying very bullish things about Ethereum right now. And it'll be interesting to see if it can step back into that range up here, but that will require one heck of a move. But again, 50-day did not work as support for Ethereum. So therefore, those two are behaving a little bit differently. Now, I'm going to show a whole bunch of stuff just to show you how the 50-day and 200-day moving average works and how I actually trigger buy signals as well. I'm going to look at gold next for giggles. Here, I have my downward trend, and I'm going to show you a couple of little things because I know a lot of you, especially on Patreon, have gold. But when I look at indicators here, this is an automated indicator that I have in this CAMA cross. And you will see right here, the 200-day moving average crossed above the 50-day moving average. And when you get a red line, that means it's a sell signal. It's a very, very strong sell signal. So basically, on the 16th of Feb, this chart said, get out of gold. And it's funny because it was actually a very effective sell signal. And you can see there as well, the 20-day moving average is sucking, and it's acting like resistance as well to gold. So monitor this carefully for you gold bugs out there. You can see that the 20-day moving average was support until it wasn't. And then it was kind of middle of the road, and then it became resistance. So that can happen too, how these ranges can actually flip and turn. Now let's look at something else. Let's look at the 10-year Treasury. This is another very interesting one. This is where the 50-day moving average crossed the 200-day moving average, and this is a buy signal. Now, again, when interests go high, they're bad for the stock market, but they're good for other types of traders. So again, this was a very, very effective signal as well for us as we go forward. And again, you can see it's been ranging above the 20-day as well as the 50-day and the 200-day. And this gap is getting bigger and bigger. Now let's look at some tech stocks for a second. This is Twitter. So Twitter has been on a bit of a tear recently. But let's look at the last time this chart gave us a buy signal. And that was the 14th of July, 2020. And I think that was about the same time where Mark Cuban came in and said he was going to buy Twitter. But you can see, again, long-term, trend is your friend. This is where these tools are extremely effective at looking at exactly what's going on. And you can see here that Twitter only dipped below the 50-day moving average twice. The first big dip was 30th of October, and the second one was about the 11th of January. And it didn't last very long in there. And sometimes you notice as well, there is a range that's halfway between the 50-day and the 200-day moving average. You can actually configure your own. You can put in a 120-day or 125-day moving average, and that will give you an additional indicator line between the 200 and the 50. And sometimes that acts as a support level for some of these stocks. And I show that as well with some other examples. But here, if you want to get deep and again, look at the 20-day, you can see how it behaves and how the price is either above or below. This is a beautiful range here for some that like to trade. It could be a short-term trade, like a couple of weeks. And that would be when the 50-day crosses the 20-day, another buy signal. Again, just to point this out, let's look at Shopify. I love Shopify. It's one of my favorite stocks to sell puts on. And on Thursday, I'm going to talk about put selling and how it's a brilliant strategy. So tune in for that. So this is Shopify. You can see this. The 50-day has never touched the 200-day for over a year. It's insane. It's super strong stock. Did very well during the pandemic. And here we are. But you can see as well, like I said, the previous one was Twitter. Sometimes the range falls midway between the 200-day and the 50-day, as you see here and here. Now, talk about a crazy buying opportunity. And this is the other thing that I love. And sometimes as a bottom fisher, which I sometimes call myself, I like to buy stocks cheap, buy low, sell high. When you have a really good name that gets oversold, and when it hits the 200-day, watch it carefully. If it bounces off that 200-day, that's a beautiful buy signal. And it's exactly what happened here. And there was so much shopping to be had on the 5th of March. It was crazy. But again, you can't buy everything, but it's good to have some limit orders in so you can catch these down wicks here, which are fantastic. Now, Shopify is still weak. I see it going back above 1400. And so just stay tuned for that. And again, watch that 20-day too. The 20-day is about to cross the 50-day. And that's, as we said before, another buy signal. So again, as you get to know these charts, as you get to know the snake and the movement of stocks, and you get to feel comfortable with your indicators, create your own thesis and build what you like and test it and back test it. And again, paper trade it and see what happens. And when you can paper trade successfully 9 times out of 10, then you're ready to jump into the market. Okay, a couple more. First of all, Nextera Energy. I am long this. A lot of actually everything with the exception of gold and Twitter, I am actually long. So just want to share that in full disclosure as well. And that's why I know these charts very well. And that's why you'll see some existing lines too. But again, here I have my red, which is my sell signal, and my green, my buy signal. Now, these are automated. Sometimes they work, sometimes they don't. So if you sold your Nextera here at this level, you would have only made a small gain. And then it went all the way up again, and then down again. And then your next buy signal was here. And that buy signal, of course, is once again when the 50 crosses the 200-day right there. And that's the time to jump in. You can see it just got further and further away as it went over time. Now, the 20-day moving average, you can see, tracks pretty well with the stock. And the stock tends to be above it most of the time, with the exception of the most recent crash. And this was a crazy buy opportunity. I had my trend lines in, and my range was set, and I saw this hit here. So again, one of those things where this can really work very effectively. Now let's look at 2 last ones. One is NEO. I know a lot of you on Patreon have NEO and you like it and ask me a lot of questions about it. So I'm going to talk about the chart and how the 200-day and 50-day and 20-day moving average works. So here you see this big, thick green line. Here's the 200-day. The green one above is the 50-day. And you can see the NEO tracked above it the whole time. It touched it once here on the 29th of December, and not until the big mini correction here on the 19th of Feb, when the EVs just tanked. Now, what's very interesting is how this works in conjunction with Tesla. It's very important to watch that too. Watch that 20-day. We're about to break above that 20-day. And when that happens, we shall see what happens. But either way, I'm not a total fan of NEO stock, but I am a fan of this one. And notice Tesla and NEO are almost the same. They rode above the 50-day with the exception of here. Tesla broke down on the 30th of October. And since then, it was not only above the 50-day, but it was above the 20-day up until the 29th of January. And then a little dip, and then above it again, and then a big dip down. And this was a beautiful 540 buying opportunity. You remember the same day that MicroStrategy hit 540 as well. They both hit the exact same number at the exact same time in the market. And I just find that uncanny. Anyway, since then, it's been a good time, and I expect Tesla to be out of this purple real soon and get back up to the 770 range, and ultimately to the 850. And then I think I might get into another short position again. So the last one I'll probably look at again is Google. I am long Google. Here you saw a very nice sell indicator, which again didn't work, but the buy did. So sometimes the crossing of the 250, it doesn't really work for sell signals, but surely it does work for buy signals. So these are things that you learn as you go, and it's important to look back at history and see how it works. Now, Again, you heard me before saying 200-day moving average can act as killer support. And this was a killer buy opportunity here at the 200-day moving average for Google. And since then, straight up and above the 20-day, a little bit of consolidation here up until the 15th of Jan, and then up again, total breakout when they blew out earnings. So again, it's important to know what's happening in the business world, the news world, and how these things actually happen. And since then, we've been consolidating a little bit up here because the market's been weak, but the relative strength of Google has been very, very strong. But I expect it to slow down and not to continue on this trajectory. And that's where we are. So let's jump back to the presentation and do a quick wrap up. So conclusion, as always, and I have no idea how many charts I went through, but it was a lot, but hopefully you all got something from it. We took a lot of different examples. We took 10-year treasuries and gold and a bunch of tech stocks and Bitcoin and Ethereum. And we saw how the 200-day moving average works. Now, in an up market, in conclusion, when great names hit the 200-day moving average, it's worth investigating because that could be a very strong buy signal. The 50-day moving average can act as a great line of support. Stop losses can be placed under the 50-day moving average for safety. And moving averages can give a good buy and sell signal, but they tend to lag. And I prefer using them as buy signals. They're not as reliable as sell signals. So always bear that in mind. And again, practice paper trade before you go and play with real money in the marketplace. And if you like this type of stuff, if you want to broaden your horizon around all things investment and become more skilled, please subscribe, hit the like. And finally, move this out of the way. If you really want to get deeper, we've got a wonderful community on Patreon called InvestAnswers. So a big thank you to all the Patreon members out there. Appreciate you every day. And scammers, they're really ramping up their game because people are gullible and they're pretending to be me, just like here. And they'll give you a phone number. They're even mimicking a fake email, info.investanswers@gmail.com, something crazy like that. That's not me. I'll never email you. I'll never ask you to call me. I'll never ask you to WhatsApp me. So again, everybody, please, please, please be careful. And the reason the scammers are so prevalent today is because they are winning. And the law of large numbers, if they post on 1,000 videos, all they need is one person to respond. Just be careful, everybody. It's a dangerous world out there. Be safe, invest wisely, and keep on learning. Take care. Bye.